All right, welcome everybody. Welcome to the first session of the mentorship. In this session, we will primarily focus on learning how to trade inside daily candles or inside weekly candles or inside 3-day candles. So what do I mean by those patterns? I can show you some examples on what those patterns look like so that you have a clear viewpoint on what we will be discussing in this session. An inside daily candle is specifically formed. Let's say you have a down candle like this, okay? And it clearly looks like that this is forming a swing high in nature over here. Um, let's see what happens the next day. So instead of going down and taking out the daily low over here, the market actually makes an inside daily candle. So an inside daily candle by definition means that the new daily candle which is being printed, it's being printed within the previous daily candle's range. So the entire range of the inside daily candle is not actually going above the previous day's high, and it's also not going below the previous day's low. It's trading within this larger inside day. It's trading within the larger drawdown we faced the previous day, and the next day is shallow. It's not going down, it's not going up, it's basically within the previous day's range. Now, generically speaking, what traders know about inside daily candles is that the moment you take out the low of this particular inside daily candle, you have to short it because that technically in their mind is like a lower low. And if it's a lower low, then the market is going to start expanding to the downside. And you will be attacking the lows and going bearish from there. Or if you attack the highs, then you have to long the market to go higher because you're making a higher high and the market is turning bullish. So you need to be going long on the market. None of these concepts are actually true, and you should forget this. Just press delete and throw this information out of your mind that this is actually going to be happening in the market. Because inside daily candles is not actually how they work on whatever traders are taught about how they should be working. Like you should not be doing market orders when it's actually trading at the highs or market sell orders when it's trading at the lows. I will go over the process on how you should be assessing them, and they are very profitable if you can learn on how to exploit their patterns. So I will go over a bunch of scenarios on how they play out, and it also helps determine on whether the trend is actually going to be trending or if it is going to be reversing and going lower. Okay. So whenever an inside daily channel is formed by itself, it does not necessarily mean that it's a trending market. It just means that the market is in like a neutral fashion, like it's generating what we call liquidity. We went over the idea of liquidity in the previous lectures. So if you don't know what liquidity means, I would highly recommend to rewatch the lectures previously. Liquidity means that anything which has a daily high and a daily low like this, there are orders which are residing at these highs and lows. That's liquidity for the market makers because they know that retail traders have kept their stop losses, their market orders, or they're viewing these levels to enter the market. So anybody who's trying to enter the market and put their money at risk, that's liquidity for the market makers. Okay. So the market makers exploit this and they try to hunt these people's stop losses before the actual move actually happens. So say for example, if retail traders wanted to short this market and they wanted to like basically enter short and be like, the market's gonna collapse, then the market makers have to make them believe that the market is actually going to go down. So what the market makers know is that retail traders have their limit sell orders at these lows. So generically, what happens is that they will take the market lower on the next day, trigger those sell orders, and if they have to take the market higher, they need those orders because market makers always need liquidity before the real move has to happen. Like they cannot move the market unless their own orders are getting filled. Okay, so notice like we're gonna go on the hourly chart and see what happens on that. Okay, so we have mapped these levels out, and now our job is to like see how the market unfolds on this inside daily candle. What it's doing? It's going lower, right? Tags this low, goes lower again. So do you see what I'm trying to explain here? This was what you call a classic stop run. Anybody who tried to short the market over here, they were blown out of the water, and immediately the market went against them to the upside. Now, in order to exploit this pattern and understand how the market makers actually move the market, you have to understand the concept of SFP. This, like the wicks that are forming over here, this is what you call an SFP. Now, if you go in the concept archives, I've posted like a bunch of examples on what SFPs are, but I'll go over like a brief moment on what to define what an SFP is. This is what you call like an entry trigger to enter long in the market. Whenever you see an SFP forming at the previous day's low, your bell should be ringing in your head that this is where the market makers are actually going long on the market before they take it higher. All right, that's your entry trigger on inside daily candle failure pattern. So what I said over here is that instead of seeing a breakdown, what you witnessed is a failed breakdown. Because when they took out the low, the retail traders were convinced that the market was actually going to collapse because they were trying to short it. So instead of seeing a breakdown, the market reversed and it actually like took off. It went vertical. So by default, the name of the pattern becomes inside daily candle failure. All right. The failure part comes in where this little bit of a tiny wick is formed in the form of an SFP. Okay. The failure to close the hourly candle below the previous day's low. Having this SFP formation is the trigger to enter long on the market and take the market higher from there. All right. So by essence, whenever you're entering long on the market at the SFP formation, your target should be like this high and this high. When you tag these highs, trade is done, get out. Don't try to assume that this is going to be like a Hail Mary, which is going to like take you to like gates of heaven, that the market is just going to keep going vertical. Okay, the whole premise of inside daily candle failure is that you're attacking one side of the liquidity, which is the sell side, because when the market went lower, the market makers are trying to take out the stop losses for people who are trying to actually short the market, right? Or if somebody's sitting long, they're trying to like stop them out. Or if somebody's trying to short, they're triggering their market sell orders so that they can enter short. And by entering short, well, somebody has to buy their short orders, right? Because they're selling it, so there has to be a buyer for it. So the buyers are the market makers, and they're buying their orders and basically pushing the market higher against them. Right? So that's the inside daily candle failure. So the liquidity was taken on the sell side, and when the market pushed higher, market makers began neutralizing their orders when they basically took it to the previous day's high, and you should be fully out of your position when it attacks the upside liquidity over here. Okay, so that's the pattern which just played out in front of you. That's all it is. This is inside daily candle failure pattern. Now what happens after that? Yeah, yeah, and this one. Yeah. Okay, don't try to view it as support. This is not what a support is. This is what you call a stop run. This is a stop run. So this is where the timing of the day comes into place. The proper stop run has to happen within an actual trading session. If you look at the time of this candle, this is at 6 p.m. my time, which is 9 p.m. your time. Like basically at this time, where we're setting at. At this time, there is no active trading session going on, right? Like the London session is closed, New York session is closed. So this would not actually constitute as a proper stop run, all right? But when this candle is formed, this is at midnight my time. At midnight, specifically my time, or 3 a.m. your time, the London market opens. And that is like a proper trading session for the markets globally. So this would constitute as a proper stopper in the market. When you see the run lower and then bought back up, forming this bullish engulfing. So what you could do is at the formation of this SFP candle where you're closing all the way up till high, you should be entering long over here with a stop loss right below that. Does that answer your question? Oh, you mean like when the New York session opens? Okay, sure. Jeff, I'll come back to you. I had you muted because there was like a lot of background noise. I've unmuted you. Mm. So we'll have to find an inside daily candle, which is, let me see. Okay, sure. This one is another example. So that's the proper inside daily candle over there. And we can look at it like this. But this is a special one because not only is this an inside daily candle, this is like another inside daily candle within this inside daily candle. So what you have over here is a double inside daily candle. All right. Now, if you go on the hourly chart, this is looking like a clusterfuck, right? That you have a bunch of lower highs, you have a bunch of higher lows. So you need to see like a proper stop run happening on one of these lows before the market has to move, or on one of these highs if the market has to go down. So when the market takes this low out, notice on how the market actually does not make a failure. The hourly candle closes below this low, right? Since it closed below this low, there is no entry trigger. All right. I don't actually care if it goes higher on the next candle and starts trading above this high, but what I need to see is that the hourly candle does like a wick and it makes a stop run, like we did in the previous example. So let me go here. Now see, it tries to trade above over here, and this is still like the market has not opened. We're sitting at 4 a.m. my time, so market still has 2 hours to open in the morning. And when the market opens at 6 a.m., it is making like a whipsaw candle, attacks the high. So in essence, you could say that I missed this part where the entry could have been over here, which is fine. Like I didn't like it mainly because the stop run which happened was before the market opened, and you don't necessarily have to be a part of it if the market is not actually like doing that stop run at an active trading session. All right, but in this case, it is actually attacking this high in an active trading session. So what you could do is you can short it. Why not? Because this stop run for this low and this low has not really happened yet. And you could keep your stop loss at like 17,000, which is about 100 points above from here. And now it's running this low again because the stop run did not happen like an active session. And you can close that position because this liquidity is not taken out. Do you see what I'm getting at? That the stop run which happened was to the upside. So when the market ran up, in the after trading session, it was taking out the stop losses for people who were short, right? Because they were under the impression that because the market is going lower, they should be going short on the market. And in doing so, they were keeping their stop losses above this previous lower high. It ran up those stop losses. You enter short over that, and then you take it down for the major target over here, which is this major low in the market. And on top of it, nobody would have thought to like market short the market. Like nobody would have thought to like actually enter short on these highs because everybody would have been thinking that these highs are like sitting so clean that it should be breaking out because it's making a higher high. Except they forget that this is like a multiple days consolidation, so the market is likely not going to move until it like wipes clean either the downside liquidity and the upside liquidity. But since it ran the upside liquidity first, I'm willing to try a short, thinking that it will be running the downside liquidity. And once it ran the downside liquidity, now I can start looking into long orders. Because when I look at the daily candle, this high and this high still intact, right? It did not actually make a run up on these equal highs over there. Instead, it ran this internal double inside daily candles high where I shorted it and I targeted this low and this low over here. Okay, so once that low was ran out, that's where you can look for long entries in the market. But there is no trigger at the moment. Remember, this hourly candle, it should not be closing like this. Instead, what you want to see is that it needs to recover above this level, go above this hourly candles high, and maybe re-enter on like a retest before you take a long position. Now this is a trigger because now you have a proper swing low formation. There are two kinds of triggers which you can get in the market. Either the market makes an SFP, like for example, this kind of an SFP, like where it traded higher, but this is not forming at the major low. This is from like in the middle of nowhere. So it's not actually an SFP. But what it could have done is like when it went lower, it could have rejected it and form an SFP, and you just like enter long at the SFP. Or you wait for the market to actually make a U-turn and create some kind of a swing low in the market. And to create a swing low, you need at least 3 candles to form. So this is one downturn candle, then the up candle, and the third one confirms this is a swing low. So then you can like enter long over here with a stop loss right below here at 16,566. Okay. And let's say I longed it over here with a stop loss below this low. And I'll be like running it all the way up till there. If I don't get stopped, that is. See what I mean? After it formed the swing low, what did it do? Came right back down, retested this level for support. That could have been the second entry if you wanted to be aggressive and like average down this position. I didn't know average down. Like I was that much sure that it was going to go up because there was like a swing low formation. You gotta like have a second entry over here with a stop loss right below that. Now the reason I'm saying that the stop loss can be sitting over there is because when you look at the daily candle, the daily candle actually closed like this. I remember trading this pattern, that's why I'm telling you that it played out very well. When the daily candle closes like this, that's a failure. The failure is that it's trying to break down, but you don't actually have a breakdown because the daily candle has failed to close below these major lows in the market. So even if the next daily candle's price action comes lower and tests this low, you can still have a stop loss right below there because it should not be going below that stop in which it did after forming that swing low in the market. Okay, so if you play out the next day's price action, it did not actually come down over there because that retest actually happened intraday. But this retest happened during the market hours. So if you look at the time, this rundown happened at 6 a.m., which is when the market opened, at 9 a.m. your time, EST. This swing low formed at 7 and 8. Okay. You could have waited for some kind of retest to happen, but sometimes those retests don't even happen. And you know what's even more clean? That pattern which I'm discussing is the inside daily candle failure. When this retest is beginning to happen, look what happened over here. On the hourly chart, it created an inside hourly candle. You see how the market is fractal in nature? Now, the same pattern which we're dealing with on daily chart, it's playing out on the hourly chart as well. So you can map out this inside hourly candle too and wait for either the highs to be taken out or the lows to be taken out. But if you're bullish on the market, you actually want the lows to be taken out, do a stop run on the lows, let it go down, and look for a reaction to happen on the breakdown which happens because we need a failed breakdown. So what happens on this hourly candle? It tries to run this high, but it does not go for the higher over there. Goes down, taps this SR and is trying to reject it. So you can even like go down on the 15-minute chart and then look what happens on the 15-minute chart. It goes up and takes this high for the hourly high, goes down, tests this low, the previous inside daily candle low, for support. And the moment it starts trading above this hourly low, that's where you can go long as well, like on this candle. And it never actually, because the moment you start making higher highs over there, that is where it's game over. It should not be coming below here. Mainly because now you're dealing with that this is a low, this is a high, this is a higher low, this is a higher high. And then that's bullish price action for you right there. And if you then play it out, I'm going to make it faster. All right, that's trade closed once you enter over here. How much did you cover? Like if you longed it over here, this is a roughly 200-point move in NASDAQ. That's 1.31% gain. 200-point move is like massive in futures, that is. Like 200-point move, if I catch in like one day, I'm done for the week. I'm not trading. 200 points is like good enough for NASDAQ, that is. That I can like print at least $15,000 just like capturing 200-point move like that. Is the pattern clear on how I trade it, on how you should be viewing it as well? Like Jeff, this is where you can ask your question. I have you unmuted. Yeah. Ideally, you want the lowest one. Okay. So in this case, since it only went till here, so since we had this one and you only took this one out and it's going for that, what that means is this liquidity is still intact and market makers know it. They will come for it, but at a later date. It may not be the next day, may not be even like a week after, but they will remember. The algorithm remembers it. All right. So that is where I'm like, when the liquidity run happens like this, and you're going for the highs, close the trade. Never marry the trade thinking that it's going to keep going in your direction. Because inside daily candles are very notorious in terms of which side of the liquidity is being grabbed. So in this case, since like only this low liquidity was grabbed before it took off, and the liquidity grab actually happened overnight, which is like in a London session, and then you ran off like when the market opened in the morning. The market makers know, they just know that people have their stop losses sitting over here and they will come for it very soon. I just don't know if they're going to do it the next day or now this, for example, when this thing happened, let me go back. All right. let's say we were dealing with this inside daily candle, right? That we took out this low and we're going for the high. Now, I also mentioned that, this liquidity is still intact. It hasn't been run yet. There is no stop run below here, okay? But they have run off this high, this high, this high. So they have basically gotten everybody to enter long in the market just by making this vertical push up, right? That everybody's getting hormonal that we have the next bullish leg happening and we should be getting long in the market. But what happens is that once they push the market above this high, they do an immediate reversal in the market. This is a swing high formation. This is a very, very strong swing high formation. So when I was looking at this thing, I was not long in the market. Like I just did not know how far down we were gonna go because we were like doing this in the early hours of the session. So we still had roughly another 4 or 5 hours remaining on the session. So I was not sitting long on the market thinking that we will like reverse it and take it higher because I was aware of the fact that this liquidity is still like untapped. Okay. Now notice when they took it down lower, this was in the middle of the late session. This was like 1 or 2 hours before the market was going to close. There was a bounce that rejected it at the previous inside daily candles high. And this rejection happened in the last hour. So that was like, a very clear confirmation that the next day you will be running this liquidity over here too on the downside. Oh boy, it's just very annoying on how they do it. Like it took a while. Let's just say that. That yes, finally. Now notice how they extend the price action in time. Like I had to go and forward at least 3 days worth of price action. We never went for the high again. Like there was no stop and done again. Like once the stop run was done, you went lower, you took out this low. That was shift in market structure, right? And by definition, you should be going for this liquidity. It should have happened in the next hour or so, but it didn't. Instead, what they did is like they made like the market do like a fake bounce, convince the market participants again that you will be like going higher again and will be bullish again. Instead, what they're doing is they're creating a lower high in comparison to this high. So you should be taking the Fed from here all the way down to that. Like we're rejected, 0.75. So not only that the inside daily candle frames your bias, that which side of the market is actually trapped. Like I was very sure that the side of the market which is trapped is people who are long. Because when the market reversed, those long positions are trapped, right? Because these lows were not taken out. They did not have any stop run, but this thing did have a stop run over here. So anybody who's long in the market, they are like sitting underwater thinking that the market made a higher high. So they entered long over here and they're sitting in drawdown when this drop happened over here. So all I'm just like patiently waiting is that they're gonna like create like a lower high, like giving some kind of a ointment for anybody who's long by giving them this bounce and applying it on their boons, making them feel secure that the market is gonna reverse instead of go higher, instead of reverse it again and slowly, slowly taking it down and like running this low again. And that's the second part of the pattern which is played out, which is that yes, you ran the highs over here, but now you're running the lows as well. Okay, so whenever there's like untapped liquidity on the extremes, just remember the algorithm remembers and it will like come for it at a later date. It may not happen like the next day or even the day after, but it will happen like in the next week or even like 2 weeks later. It will like remember that it is going to come for it. Is that clear so far? Okay, good. So now that opens the idea that when you have this insanely drawn out price action in the market, where you were like going up, coming down, then going side by side by sideways, and then you're coming down. When you see this market being stuck in a range like this, where you had like this drawdown and then you went up and then you're trying to come up, but you're not actually like going down in like a straight line. You're like doing wishy-washy price action where like coming down, going up, coming down, going up. I would highly recommend to zoom out in that case. Like instead of like looking at the daily chart, because we were just focusing on the inside daily candle, right? Like this. Now the market is not actually going anywhere. It's like stuck in this daily range. Like it's sitting at this high and then it's sitting at this low. When it comes at this low, it comes over here, then it comes back over here. So in that case, you should be going to the 3-day chart next. And then you can see on the 3-day chart that there is now like an inside 3-day candle, which is forming like this. All right. Now, when you have an inside 3-day candle forming and you have actually run up the lows after, when we were discussing on how the market should be like running this low over here, you should be looking for long triggers actually, because the higher the time frame, the higher precedence it has over like the lower time frame. Now we were dealing with the inside daily candle pattern, but there is also inside 3-day candle pattern, and then there is the inside weekly candle pattern. Then there is also inside 2-week candle pattern, inside 3-week candle pattern, inside monthly candle pattern, inside quarterly candle pattern. Do you see where I'm going with that? That the higher the time frame goes, there is consolidation happening on even like higher time frames, which might be dictating what's happening to the lower time frames. So by essence, what I'm trying to say is the higher the time frame goes, it has much higher precedence over the lower time frames. When we 3-day, 1 day, and then the hourly charts, which is like 4-hour, and then 1 hour. All right, so the 3-month pattern, highest precedence because it takes 3 months to actually form that candle, 3 months worth of data. Then the 1 month, only 1 month is taken to form that data. Then the 3-week, basically 3 weeks. In 1 month, they're like 4 weeks. So what is lower than 1 month? It's 3 weeks. What is lower than 3 weeks? It's 2 weeks. Then lower than 2 weeks, 1 week. Lower than 1 week, 3 days. Like 3 days, like the half of the week, right? So almost half the week. Because we have 5 trading days in a week, the 3-day candle actually gives you like a good breakdown of the entire week into like 2 halves. So I also look at the 3-day candles. From the 3-day candle, you go to the daily chart. Like 3 days is like one 3-day candle. So one single day, that's the daily chart. Then in the 4-hour, it takes about 6 4-hour candles to form one daily candle, right? So you have at least 6 4-hour candles to look at. So that's the inside 4-hour candle. You can play over there too. And the hourly candle takes 4 hourly candles to form one 4-hour candle, or 24 hourly candles to form one daily candle. All right, so the market moves in a fractal manner. So let's say we have a inside 2-week candle failure. So the 2-week candle takes like 2 fucking weeks to like play out. And in between, you will have like inside daily candles forming within the 2-week candle, which will be like acting as trigger for you to like go in accordance with whatever the 2-week is doing. I can give you those examples as well, like when we're like dealing with like inside 2-week candle failures or inside 2-week candle breakouts, which was over here, if I remember correctly. So yeah, like this. All right. And we can go over here. So that's the inside 2-week candle, which we formed in February of 2023. Now, the way I would play it, like I would go one time frame down and look at what the weekly candle is doing. Now, the weekly candle also had its inside weekly candle over here. All right, so you were dealing with this inside weekly candle first of all. Now, let's assume that this 2-week candle started on 13th of February, right? And this inside weekly candle formed on 6th of February. So we'll rewind this price action and actually go over here. So let's say we're looking at this inside weekly candle first, because that's how it formed, right? And we'll remove this thing first. So we're just looking at this inside weekly candle. Now, the way I would play it, I will wait for the market to actually go lower or go higher before I enter the market. There's no position if you just like looking at an inside weekly candle like this. Now, if you look at the inside 2-week candle, it hasn't actually closed. Remember, the next 2 week candle opens on 13th of February. So we're going to see what the coming week is going to do before we take a position in the market. Let's see what the daily chart does. So we have this level as the high of the inside weekly candle, and these are the levels for the low of the inside weekly candle. Remember, you are supposed to take out the low before you go higher if you have to enter the position. If it just goes higher without running the low, there is no position. So you should not be doing anything in this case. All right. Next day, basically nada, nothing. I won't be doing anything, is what I'm saying. Goes higher. Now it's almost attacking this high over here. If it takes out that high, then I will have to like reconsider this entire pattern because this is a lower high in the market. If you take out this high, then this might be like a change in market structure and you might be like going for that high with that. You see how bastard the market is? The market makers know that people have orders sitting over here. So instead of like trying to take out that high, they did not. They created a lower high in comparison to that one and create like a massive bearish engulfing on top of it. So what they're doing is they're creating liquidity. This entire premise of like doing this bounce and then like taking it down, they're convincing you that you should be putting your stop losses over here. All right. That's the whole point of like running the market up and not actually taking out the high and taking it down. They're just like making you believe that the market is going to collapse and you should be putting your stop losses and go short of the market, which might happen. Like, I don't know, but we'll see. So, but you have to keep track of what's happening on the weekly chart as well, right? This weekly candle opens on 13th of February. This is 6th February's weekly candle. Okay, yeah. So this is Thursday. We're gonna see what happens on Friday. We went down again, but we did not take out this low. So we closed the week over here. So the roundup of the week is that you have a double inside weekly candle. Now you have this week's range within the previous week's range, and the entire these 2 weekly candles are trading within this bigger week's range. Okay, so the market is very congested. It's like it's gearing up for a very big move, but we just don't know in which way it's going to go, when it's going to do that. And on top of it, not only you have like so whenever you see like a double inside weekly candle, you should be zooming out and looking at the 2 week chart. Now this candle opened on 13th of February, which means when this 13th of February weekly candle opened, that's where you opened the 2 week candle as well. All right, so it's showing you how this 2 week candle closed because the next 2 week candle is going to open on 27th of February. And that will be like after this next weekly candles close. So you still have 2 more weeks before the next 2 week candle is going to open. So let's see what happens next week. We're going to go on the daily chart and see what the daily chart does at these lows and this high. This is Monday, inside daily candle. Just breakdown. Notice the highs were not taken for this inside daily candle. Now I assume I don't need to like map out the inside daily candle for you because there are already a lot of levels over here, but your eyes should be like going for this inside daily candle like this, and it's basically trading within this larger down candles range. So when you see like a breakdown happening like this, you should be convinced that the market is actually looking to go lower for this low when the daily candle closes like that. All right. But also be on the lookout that because we ran the lows and we did not actually attack the highs, the market makers will come back for it eventually. It may not happen the next day, but eventually when the market turns, you will be coming back for it and going for this and this high because you're running the inside weekly candle lows first. All right. But the way this weekly candle closes, we actually close at the lows and we don't actually like, do like any kind of a stop and rejection of any kind. Okay, it's like a full breakdown at the moment. So look at the daily chart. The next day, we come back up. reject at the lows, go lower. So that's becoming more clear to me that you're going to be running this low. And when you run this low, that's where I'll be entering the long position, because the larger pattern which we are playing now is on the 2-week chart. By creating the downside candle, you are now confirming that you have an inside 2-week candle failure. Oh, sorry, an inside 2-week candle in making, which is going to look like this. So once you have an inside 2-week candle in formation, basically take everything out on the lower time frame chart, like delete whatever you have on the inside weekly candle, delete what you have on the inside daily candle or the 4-hour candle. The higher time frame takes bigger precedence over the lower time frames. Okay. Then go on the weekly chart and look what's happening over here. Okay, so we have this high, this low, and this low, which is going to be like our reference points on what we're going to be dealing with. So we will be paying attention to what happens in the coming week, because we want to see like a flush happen on the downside and then a rejection if we have to go long in the market. And that should be happening on the weekly chart. So we will see what happens on the daily chart as we monitor the price action as we go forward. So let's see what happens on the week of 27th February. This is a down week, so I'm assuming we will be seeing like a run down of these lows. And we will be opening a new 2-week candle as well, which is on the week of 27th of February. Okay, let's go. Inside daily candle, you could probably map that out like that. Another inside daily candle, spicy. Map that out. Ooh, res the lows before. It does not take out the highs. Woo! Takes the lows, rejects that. So what you can do is, I will be expecting a run up the next day. You could probably look and get and attack the highs over there. Yep, res the highs. Now, I will be looking at the weekly candle to see if I would be holding this long for. Let me look at that 2-week candle. Yeah, so you ran the lows for the inside 2-week candle and you formed a daily SFP on it. Where the fuck is that? Where did I enter? This was not the entry. Oh, that's the 12-hour chart. All right, so we entered when this SFP formed. Like basically, I'm gonna take this thing out. I cannot take this thing out. Anyways, so we had double inside daily candle. We saw a breakdown happen, and then we saw a run below this low, right? And this is what an SFP formation looks like. And this SFP formation is happening on the daily chart, where you're attacking the inside 2-week candle, and I am likely gonna hold it till like this high is tapped out, because I am assuming the next 2-week candle is going to be a bullish weekly candle, or a bullish 2-week candle in a way, right? Because the way the inside 2-week candle failure would happen is that you would want to enter on the SFP on the daily chart for the lows of the inside 2-week candle, and you would be attacking these highs over here. All right. The next day, the market basically doesn't go anywhere. But remember what I mentioned? This inside daily candle saw a breakdown, but did not actually take out the highs. I told you guys that the market will come back for it. It does not forget that these highs were like left untapped. So in the middle of when you ran these lows for the inside 2-week candle, you formed double inside daily candle over here, ran the low of the double inside daily candle, formed an SFP. That's where you go long. And basically we entered at the lows of the market over here. Okay. That's one thing. Oof. Basically does a U-turn and comes back to my entry. Now you need to be keeping track of what's happening on the weekly chart as well, because we entered this thing on Friday, and we have a new weekly candle which opens on Monday. So let me go back here. Like if I go back, the position is going to go away, but that's fine. So when we go back here, we have to look at what the weekly candle closes like, and it closes like this. So even if the weekly candle is closing like this, what you're doing is you're closing it above these weekly inside weekly candle lows, and that's a perfectly good pattern. Now this is actually forming what you call like a weekly swing low, right? Like you have a down candle and you have an up candle, and the next week it needs to be an up candle to confirm that this is going to be like a weekly swing low, which is a swing low in comparison to this low over here. All right. So the next week needs to be actually like a bullish weekly candle to confirm it. And on top of it, since we already took out this low over here, we need to see this inside 2 week candle to actually close above these lows over here in the market. Now I'm going to take the black levels out because they're confusing the higher time frame. Should be red so that the inside 2 week candle is like very familiar. So this is what we're dealing with. Right? When I see this pattern, I would be like sitting on the long position, honest to God. Like I would not close it because I'm like targeting these highs over here. This is a perfectly good pattern to hold. Even if it like came back to my entry, that's fine. Like that's not a big deal if it came back to entry. Because the higher time frame premise is that because you ran the lows, these highs are next. Now for the next week, the market actually came back and it ran the lows again. Now, when you see a rundown happen like this, by the way, I would be getting stopped on that position. Truly, I would be moving my stop loss here and I would be getting stopped on it. So when you see something like this happen, where you're getting stopped on a position where there's a higher time frame premise in play, and you're getting stopped on an inside 2 week candle failure, which was like a perfectly good trigger, you need to zoom out even more and go on the 3 week chart. So what you're noticing now is that there's an inside 3 week candle in formation instead of the 2 week candle. Okay. So when you're looking at this, the inside 3 week candle opens on 6th of March. So where's the 6th of March? Okay, yeah, that makes more sense. So the reason I got stopped out is because this entire consolidation, which was pulling back, even though I had a very good entry on the daily chart where we took the SFP over here, we took out this low as well, and we ran up, I forgot to check the 3 week chart because we were closing the 3 week candle as well. And we have an inside 3 week candle failure now. Like this. Sorry, an inside 3 week candle. It's not a failure yet, but we have an inside 3 week candle information, which means that even if the daily SFP was formed over here, this is now like a hot level because when the 3 week candle opens on 6th of March, the algorithm will be searching for like this liquidity because it is a fresh liquidity information for this 3 week candle, the inside 3 week candle. All right, so this is like a bigger consolidation. It's not like a little consolidation. Like it started as a little consolidation, but then it started stretching out. And as you stretch out in time, bigger time frames start getting involved. And when bigger time frames are getting involved even more, you need to be paying attention to it on the 3 week chart and wait for a stop run to happen over here. So in essence, I should have closed that position when I was looking at this inside 3 week candle. But I was not, so I would have held it, which was a mistake on my part. So as I look at the daily candle, it goes lower over here. And the moment it made this SFP, like you see this tap over here and it goes down, goes up like that, that would be a buy. Because you're anticipating that this is a daily SFP and the next daily candle should be a bullish candle. Now what's funny is that actually it ran the daily low again, which is much more properly seen on the 4 hour chart. And this is where our knowledge of like market structure shift comes into play. I'm going to close this thing out, but I will recommend that you do this exercise as well whenever you're trying to trade alongside the bigger time frame price action, because when you're dealing with levels which are being approached based on the inside 3-week candle or the inside 2-week candle, go down to the 4-hour chart and mark your nearest 4-hour lower highs. Okay. Now, even though the market came down to take this low out and it formed an SFP, this is a 4-hour SFP. So you should be looking at this and be like, yep, it came down, took out the low, formed an SFP, I'm going long. That's perfectly fine. You can do it. But in order to confirm that this is a low, what does it need to do? It needs to go above the latest lower high. So this lower high needs to be violated if we need to see a trend shift happen in the market. If this lower high does not get violated, which means this low is still vulnerable for a stop run. Now when I see this candle, I'm confident that it is going to get violated because this is a swing low information. Like it got so close, but it was not violated, and it formed like a swing high now. Now technically, this is a lower high in the market, right? Which means that it's still vulnerable for a stop run below here. So you should not be putting a stop loss right below there. Like you could have like a wider stop loss, that's fine, but your stop loss would be based on this price action over here. Like if you're entering long over here at the bottom, your stop loss should be at the minimum below this thrust candle, like this bullish engulfing which is formed here. Like this is a proper swing low in the market. So your stop loss should be at least below this black level. Okay. Like don't be too tight with the stop losses when you're dealing with like such a big pattern, which is formed at the 3-week chart. Oh, it came so close. So that position would still be intact because you never get stopped on it. Or you could like be safe and wait for some kind of a trigger to go along. The trigger to go along would be to break this lower high and go up. That's the trigger to go along. You could go long on there if you want to, but you're already like, you've given up this entire movement and you're like halfway through the pattern, which is why I prefer to enter at the extremes. Like when you see an SFP forming at the extreme, just punt a long order and you're good to go. Instead of like, waiting for like a confirmation to happen. When the confirmation has been confirmed, the market has already like gone up from here to here. It has gone up like 3.2%. So 40% of the move is already done and you're like waiting for the next 60% to be done, which in theory is fine, but you don't want to be giving up on such a big movement already when you can like be entering on the low of the market, because it's very clear that if you're dealing with like such a big pattern on the higher time frames and you have a fundamental premise that in the longer term the market is going to go up. So from a risk reward perspective, this makes a lot more sense to me that I would be like entering long over there with stop loss right below that and targeting that. So that's a 4 risk reward ratio. Instead, if I would like take a long position over there with a stop loss below there, targeting that, that's a 1.34 risk reward ratio. Okay, so I would much rather happily take this long position and be more aggressive about it because I've tested these patterns so many times and I just know that once you see like a stop run happening like this and you see like a swing low formation, more often than not it's going to be going for the opposite end of the trade, and that is eventually what happens in the market. Now, in order to go from here to here, how much time did it take? 9 days. So for 9 days, I was right about the market that it's going to be like a trending market to the upside. Why? Because I was playing the inside 3-week candle failure pattern. What the fuck? Get out. All right. So we took out the low. Once you have a clean stop run on the low, and if you're expecting it to be like a failed breakdown, by definition, the highs of the candle will be the magnet, and the market gravitates towards it for the next 9 days. And you know what happened? What was happening over here? Credit Suisse was going under. Like the entire banking system was getting collapsed at this point. And I was like, anticipating, okay, not a big deal. The Fed is going to come in, Janet Yellen is going to come in, they will print money and they will save the market, and that's what happened. And those long positions paid off. Even though everybody's like freaking out about the economy collapse and recession is coming and whatnot. But I'm like, no, it doesn't make sense to me. It more so to do with the market structure, with the market printing like a low, higher high, higher low, higher high, higher low, never took out this low, higher high, potential higher low. Now that potential higher low nailed the bottom because I was aware of this pattern, that there's this inside 3-week candle forming. After forming like a bunch of inside weekly candles, then forming like an inside 2-week candle that transformed into like an inside 3-week candle, which became a lot clearer that you're actually doing like a bigger pullback against this entire trend. And you could like long this higher low in comparison to this higher low and anticipate that it's going to go for like another higher high and go for this higher with that, which is what happened eventually. It did not go up in a straight line. It did like a bunch of consolidation and then eventually it took off. We can go over what happened over here too, but I hope this is clear on how I managed the market analysis. Like going from, okay, we had an inside weekly candle. I'm going to take everything out. So we had a inside weekly candle, turn into an inside 2-week candle, turn into an inside 3-week candle, still recognizing that this is still a very bullish pattern overall because you're just like running the lows. You're not exactly running the highs yet, and you're keeping these lower highs intact. The market will eventually turn and like go for those lower highs, and it did. That's the entire pattern. That's it. Is it clear? Okay, good. So in equities, or at least in NASDAQ, this pattern forms at least once every month or once every 2 months. That's it. It's not that common in NASDAQ, but when it forms, it has a very high strike rate, and you do not want to miss it when it forms, because what it symbolizes whenever you see like an inside weekly candle, inside 2-week candle being formed, it symbolizes consolidation. That's all it means. That what the market is doing is it's consolidating. And after consolidation is done, what you get is expansion to the upside. So you need to be getting horny when you see something like this happen. Because what it means is that once the market is done with this like fuckery of like taking out the lows, it will like rapidly go for the highs and it will like be expanding to the upside for like weeks and weeks to come. Because the bigger orders which the market makers wanted to fill, they were filled over here and they have no reason to bring it back down now. Because when you start expanding on the 3-week chart, that expansion lasts for at least 2 months, 3 months, or 4 months. And you will not be coming back to this level again at all, ever, I would say. Unless like, there's a recession and the economy is breaking down, whatnot. That would be a separate case. But in like a okay economy, like decentish economy, you're not coming back down over here. Because that's a macro manipulation which happened. Like whenever you're dealing with something which is like bigger than the weekly chart, that's a macro time frame. Okay, and in order to like form these kind of patterns, it takes so much time to do it. When they have spent so much time building those orders and getting them filled, and then they are like taking it off, like they have done all the work. Why would they bring it back now? Now they have everything they need in their arsenal. They have all their bags filled up. Now it's time for the market to actually start expanding and go for their bigger targets along the way. Okay. So that's for NASDAQ specifically on how this pattern would unfold. And then after this inside 2-week candle pattern, there was another pattern which formed over here later on, was this inside 2-week candle pattern. Now this one was very clear to me, like mainly because you were now trading above major SR level. Remember from our lecture from SR levels where I mentioned if you have a bigger weekly level, This was a massive resistance zone, and it was like holding it. It was holding against this entire resistance zone as well. This was like a do or die line, in my opinion, for Nasdaq. Something like this. You could like map this SR level out. You can map this SR level out, but basically this was a very, very strong resistance zone. So when you tap this SR level, if you remember from our past example, I mentioned like I did like an activity with you guys, and I mentioned to you that that from a highest precedence level, this is the highest precedence SR level. And this is where I told you guys that I will give you an example where this is going to like show its true colors, and that's the highest resistance SR level, which we tapped, and we saw like a at least 3 week, 4 week pullback happen after tapping that SR level. So once you went above it and you closed the weekly candle above it, that means that the market was like traversing above that SR level and it's turning bullish on the macro time frame. So when you saw this inside 2 week candle failure, sorry, inside 2 week candle pattern form, all you had to do is be on the lookout for a run up below this low. It should not go below this low, no, because when you expanded this candle up, you are closing above a massive SR level. So there is no reason for the market to come below this low. So when you see like a inside 2 week candle like this, which is closing above an SR level and you're consolidating, all it's doing is it's creating orders to be filled at the SR level itself. Okay, so it's going sideways, sideways, sideways like this. What does it do? Goes and takes this low. That's where you long it, buy it. That's a daily SFP. What is it the next day? Inside daily candle. Next day. Does not even run the low, just goes higher. Immediately to the highs. This is where I think Meta's earning came out and it just like punched it. Meta and Microsoft, they both came out. I think Microsoft was the one which was like the one punching it because Microsoft was like trading over there. And that's where I think I mentioned as well, just to have bigger dated option calls on QQQ that is going to go till there minimum because Microsoft already traded till there. So if you played it out, boing, just up, up, up. Now notice on how the market after taking out this high, what does it do? Comes back down, tests the SR level, which is what I mentioned in our past lecture, the SR flip, that the resistance zone was like overtaken and now it has to come down to test the SR level for support, tests it, punches it higher again. And once it punches it higher, what does it do over here? Inside daily candle, right? If we take this out, look at the hourly chart. You have this as an inside daily candle. So once you go below this low, notice what happens. Decisive breakdown. What do we need to see? A swing low formation. Technically, this was your swing low because you had like a down candle, up candle, second up candle, third up candle. You should be going long by then. Like, how many more up candles do you need? Eventually, that up candle is like, fuck you. I'm just gonna go. So that was like a very proper inside daily candle failure, which played out over here. I think there was some event over there. I just don't know which event it was. But the bigger pattern was that you go long over here, ride it, go long on the retest, ride it. Inside daily candle, runs the lows, long it again, ride it. And once you have a close happening like this is a bigger support zone now because now you have a stop turn which happened over here. You have a stop turn which happened over here. You had a retest of SR. So this is like a low, higher low, higher low. See? Never came back. Just like higher low, higher low, higher low. And you were after the races from there. So you see how the market was like giving you footprints. It's like just like printing the map of like the elephants moving. Like inside daily candle, what it does is it gives you the map of where the elephant put its footprint last when it moved. That's what it's doing, and that's what I'm mapping out when I map these levels out. So when you see a stop run happen like that, after doing a SRE test, after doing like an inside 2 week candle low run and goes to the high, makes an inside daily candle, runs the low, goes higher, does a retest again, goes higher. That's the elephant moving. It's like it doesn't move in like like an eagle. Like when it moves, it will be like putting like a very big stamp of approval that I walk from here. You will see like a entire footprint of the elephant when it moves. This is the footprint which we're talking about. Okay, so this is another example on how inside daily candles are effectively working in the market. Like when I say inside daily candles, I literally just mean the failures. That if the market is bullish, you would see failures happening of inside daily candles all over the place. That you would be attacking the lows first and then going for the tops over here. But if the market is bearish, the opposite is going to happen. You will be attacking the highs first and then going for the lows, like we're seeing in our current market environment. If I were to take us right now over here, notice what happened over here. Remember where we had the inside daily candle? You ran the highs and then you went for the low, and then you went higher again over here. This was another inside daily candle failure here. So if I were to take this out and look like that, so what is the market doing here? Let's go on the hourly chart. So you have this chart. You have this as an inside daily candle high, inside daily candle high, the low, the low. What is it at first? Notice it just went up on overnight price action. This is not when the market is open. The market is closed. This is happening at about 3 p.m. my time, which is 6 p.m. for EST. This is after market hours, and the market just like punches higher, gapping up after market hours, running the highs for the inside daily candle. That's where my alarm bell was like going off, be like, no, this is not supposed to happen like this. Like if it is a bullish market, it should like taken out the lows and then went higher. So when the highs are taken out like this, which means when the market is supposed to open in the morning, you should be looking to short because the market is going to come back to like fill that gap and it will like running the lows now. Now this is when the market opens. This is the 6 a.m. candle. And when it's running like that, I think that would be a short, possibly. Yep, that's a short. Runs the lows because that's a bearish market now. Like it ran the highs first. And when you're running the highs first, you should be on the lookout for like a massive sell to come in the market. I'm gonna close that. So in essence, that's the whole premise of how you should be approaching inside daily candles. If the higher time frame premise, like let's say on the weekly chart, we had a inside weekly candle as well, right? Over here. What the fuck? Just hold on. So let's look over here. Daily chart. What does the daily candle do? This is the inside daily candle. And I was looking at this hourly chart I was talking about. So these equal highs, what does the market do? That punch up which was happening. It was instead going for the inside weekly candles highs first. Like how close was that? Fuck. Like just a little tippy toppy. Just by like 1 or 2 points that like punched that for this high, which was for the inside weekly candle. And that was a stop run for the inside weekly candle. So by definition, this low becomes hot. And that's where I was like, no, I'm not touching equities. This was not supposed to happen if you were bullish on the market. And I haven't longed equities much, if you notice that I've been like, just like trading Forex, trading gold, or like trading DAX. I'm just not touching NASDAQ because this pattern, when I noticed was happening, it was becoming clear that this is some kind of a weekly high getting printed. And if a weekly high is getting printed, these lows are going to get hot. And if these lows get taken out, then this low is going to get hot. If this low gets taken out, this low is going to get hot and it's going to come till here. What happens? We're sitting there right now. Like, now the thing is that after you closed this weekly candle below here, after taking out the high, this punch up which happened, that was a short too. Like if you go here and look at it like this is actually a swing high formation over here. And since you had the stop run happen, you can go on the daily chart and look what happened over here. This was an inside daily candle. Hold on. So I'm going to mark the inside daily candle in black, and the inside weekly candles are marked in red. So there's a clear distinction. This was the CPI event. Now notice when the market is bearish. Okay, let me just like go back a little bit and replay this market action so that it's clear on what I'm trying to depict. This is what the market looks like going into the CPI event. We have the inside daily candle, which we mapped in black. These are the low highs for the inside daily candle. And the CPI candle is going to come at right about 5 a.m. in the morning. Now we ran this high overnight at 4 p.m. my time, which is 7 p.m. your time. Literally no trading session going on at the moment. And this is 3 a.m. What happens at 5 a.m.? What's the high? This is the CPI candle. What happens when the market opens? 6 a.m. Bearish candle. Swing high formation. You should be shorting that, by the way. Now I would be sweating that why exactly is it not going down? It's making like a bullish angle thing. Goes for the high. Fuck. But no, I'm fine. I'm fine. It did not actually go for the high. Like it fell just shy. So my stop would have been fine. My stop would have been like at about 18, above 18,400. Like above this stop in here. Look at that shit. It just like went down in like one candle, like a bazooka unfolded. Like knowing that this was gonna happen ahead of time, that's power. That's the power of this pattern. Like the market makers are telling you that we're trapping somebody at the highs, and we will like rug pulling the entire market because everybody has gone long on the CPI print, and it's time to like go lights out. Keeps dropping. You should be closing that. Like when you see like such explosive movement, you should not be holding the market for the next day. All right, so that was the CPI event day. Notice how the highs were like taken out first. A swing high forms, you short the market, go for the lows. And then once you close like this, even though you know the next day the market actually went higher, the invalidation would be like the CPI high. It should not be going above the CPI high if it is bearish, because by taking out the highs, there's a very proper stop run which happened. So if the market is bearish and the market makers actually want to take it lower, they have all the work which they have done. They took out this inside daily candle highs over here, which is from the previous week, right? And now when we're talking about this week, they did the inside daily candle run to the upside for the CPI day, took it down. Now they have been printing lower highs, lower highs, lower highs along the way. This was a high, this was a lower high, lower high, lower high. So if it is supposed to expand to the downside, this is it. This is where you should be getting ready for some fireworks to the downside. It makes an inside daily candle again. I'm gonna map this out. I'm gonna take this out. Now remember, we should not be going above this high. This is the invalidation now. What does it do? Initially, it went higher, but did not take out this high. Went for lower liquidity, and then rejected it, went higher again. Now it takes out the liquidity properly over here. When you see the stop turn happen, that's where you can go short. But this is happening like after hours, so you should be like a little bit skeptical. But your stop loss should be over here, minimum. If you enter short over here, that's where the stop loss should be. Now, next day, there was a massive spike before the market opened, punches it down. Now, did I know the news event was going to punch down? Well, I didn't know what the news was going to be, but I knew the market structure. The market structure was bearish. So even though I had no idea what the fundamental market was going to do, if the data was going to come out bad or was it going to be good, I had no idea. I just knew the technicals. But the technicals was suggesting that this is a stopper and you're running at the highs, it should be going lower. And that should be the invalidation. It never reached the invalidation. There was like a little bit of a whipsaw before the news event comes, but that was the trigger for the market to go lower. That's where you should be getting stopped out if it's going up like that. That would be a stop out. Now, when I'm looking at the market like that, I have no bias for now. There's literally no bias. The invalidation is here, yes, but when you look at the daily candle forming a higher low like this, I would want to see some kind of a bearish pattern to form before I short the market again. So far, like the signatures were bearish, that it's taking at the highs, going for the lows. Once you take out the low, you should be neutral by the way, but this would have been like the draw. It did not tap it. It's instead going for the high. So we'll see what happens after that. Instead, it makes a new inside daily candle. It's over here. So when you have this inside daily candle, I don't particularly like it because it's a very large range. I don't want to short it over here because if I have to put a stop loss, I'm gonna have to go over there, which is a very wide stop loss. But I can't long it either because it's very close to the low. So I choose to do nothing over here. You don't have to do anything. Instead it breaks down, closes down. That's a confirmation that it's breaking down. And you should not be trying to long it. Remember, if you have to long an inside daily candle, it has to actually do a failure. Instead, it doesn't do a failure, it just like does a full on breakdown. It closes below the lows. And once it's closing below the lows, that's a confirmation that it wants to actually go down again. What the fuck? I have no idea why this is coming up. Um, all right, yeah. So that's it. Like that's in terms of like what the bearish price action has done in the past 2 3 weeks. Now this has to change if I have to go bullish, right? That you need to see patterns forming where you have an inside daily candle where the lows are getting taken and you're running it higher. That's the algorithm's way of telling you that they're changing the entire regimen and now you are entering the bullish environment. Until I don't see that, I don't really have to go and trade, right? Um, Last time the market did that was over here. Like I discussed this pattern in the beginning of our lecture, right? Where we did this. And once you saw that happen and you went higher, that was confirmation from, this is a buy the dip regime and you need to be like buying any dip which happens after that. But until like, I see that happen, there's no need for me to go and predict where the bottom is going to be. I'm just going to let the weekly chart play out because when you're looking at a weekly chart like this, I anticipate that it's going to keep expanding until like there is an inside weekly candle or inside 2 week candle getting formed to form some kind of a bottom in the market. All right. So was this example helpful in terms of like anticipating how the bearish market structure is going to happen? Like any questions so far on how to view this pattern? No, that's a very bad mindset. Don't do that. Like, yes, I get it that it's at very oversold conditions. However, it can be oversold for God knows how long until like there is a clear trend structure shift. Just like, when the market is going higher, don't try to short it just because it's getting overbought extremely like this. It can be overbought for God knows how long before it starts cracking like it did. So don't go based on what the RSI is telling you for a trend reversal. Like, yes, play it for bounces, but don't open like a swing position. In order to open swing positions, you need to see consolidations happen. And when those consolidations happen, you will see like a clear pattern be in formation like this one or this one, where you can like position based on how market makers are positioning. Like the market makers don't just like shift from selling $100 billion worth of equity to like buying $100 billion of equity within like a period of like 2 weeks. They need time to like get that much worth of position to be funneled in the market. All right, so that's a rookie mistake to make a position in the market just because it's very oversold. At least for stock options, I would say. Like if you're like looking for like a longer term buy on your stock portfolio, like you're buying physical stock, then it's irrelevant. But we're traders, right? Like I'm trying to teach you trading strategies. So from a trading strategy perspective, I would not like be buying a position on my prop firm account in hopes of like trying to hold it for the next 3 weeks or so. Like I need to see a clear defined pattern which I am willing to trade for the next 3 days or the next 4 days. That's how I operate. That's why this inside daily candle failure, inside weekly candle failure, inside 2 week candle failure are so helpful for me to like keep my bias in check. That which side of the market is actually trapped and which side is vulnerable for a stopper, and I'm trading that direction based on it. Is that understood? Okay, good. Now we're gonna transition to like a more hands-on exercise because I've given you like quite a bit of examples on how I trade it, on how I see that the market is trading, the pattern. We're gonna go to a different instrument. We're gonna trade gold now, and I will ask you guys questions and you will answer it based on the following method. So we will rewind the price action for gold to October 2022, and we will unfold the market ever since it's bottomed over here. You will give me the following options as your answers. You will tell me if the market is going to go up, is it going to go down, or do we do nothing? These are the three options. All right. I will play the price action as we go. I will basically revolve between different time frames as I see the market is evolving in real time. And I will ask you guys whether the market is going to go up, is it going to go down, or do we do nothing? These are the three options you will be answering the questions based on. Are you ready? This is the attention part. Like I assume you guys have paid attention on what I've been talking about, and let's apply this stuff to gold and see how it does. So right now we know for sure that this is the bottom being printed. So I'm just gonna like let the weekly candle unfold for some time. Okay, so this is a weekly candle forming, and gold is pushing from here. Okay, so we have an inside daily candle here. All right, so what do we do? We're here for this inside daily candle. Do we do something? We take a long position, short position, or we do nothing? Yep, we do nothing. We just wait. What happens the next day? It goes lower. It's closing below the low. So what do we do now? Do we do long, short, or nothing? All right, we can wait. Let's wait. I would wait. I would not do anything. Even though I can see units breaking down, so it's likely going to go for this now, but I will wait. Let's see. It's going down here, but down again. Inside daily candle. What do we do? It ran the low, goes over here. Next day. What is the next daily candle going to be? Do we long it? Do we short it? Or do we nothing? Sure. This was the hourly. So technically, when you saw this hourly SIP form, this would have been the long. All right, but we're sitting over here. So assume you did not take this entry. You missed it, and the market is sitting over here. So I'm asking you, the next daily candle, to be short, long, or wait. Jeff is short, Matthew is long, Benamac is long. Who else? QBD is short. Miss Jeff is long. All right. Benamac is short now. It's not long. Okay. So you're 50-50, let's say. I would go long, personally. Ha ha ha. It's a long. No, silly. I was just asking for this daily candle. It doesn't matter what happens over the 2 days because the next daily candle it goes up, you close the trade, it's over. We won the money on the long side. Like what happens over here is irrelevant. Like I'm waiting for the next pattern to form. So the premise is that since you took out the low and you're going for this high, what you did is you created a swing low over here. So when you create a swing low, if the market has to be turning bearish, you have to go below the swing low. So even if you're like pulling back over here, it's just a pullback. I don't particularly see it as like a breakdown at the moment. So when I look at the weekly candle, okay, that gave it away. But when you look at the daily candle and it's pulling back, you have this low formation. We're taking a fib from here like that, and when you go on the hourly chart, should be longing the 0.618 and 175 with a stop loss right below there. All right. And Mr. Jeff is like, it's a short. This thing, he would have lost money on this thing if it's a short. Here. Now, personally, since I said I would be going long, it's based on this pattern. So when you had this pullback happen over here, we had the fuck. All right. We had a new inside daily candle here. Okay. Now it did not give you any trigger to go long, right? It basically just like inside daily candle, next daily candle, you go up. When you see something like this happen, don't try to short it thinking that because this low was left untapped, it needs to come back. Think of it this way. You already had a stopper, which means this is a low, this is a lower high, this is a higher low being confirmed because it pushed higher to make a higher high, right? So think about it from like a higher high and higher low perspective when it pushes higher like that. Because gold is notorious like that. That once it pushes higher like this, and it's not actually um, going for the low, it's becoming trending, but it closes above the inside daily candle like that. So next day pushes higher. We have, okay, well, technically this is not an inside daily candle because we took out the high. Let's see what happens after that. Turns back lower. Inside daily candle here. Hold on. So since we know it's an inside daily candle, we're going to go on the hourly chart and we're going to see if we want to long or not. Now I'll ask you where to long and when not to long. Okay. Do we short over here? Like you're looking at the hourly chart like this, and you know that the inside daily candle is playing out. So do you short it or not? Okay, no short. No liquidity. Matthew's like, wait. No, Jeff is like too. So when you look at the daily chart, the daily candle closes above the previous high. This is overnight price action now. So when you're looking at like this, you have to consider this as a breakout out of a inside daily candle. But since you're having a decent swing, I would recommend to go higher on a higher time frame, like a weekly chart or the 3-day chart, and see like where exactly we're trading on the weekly and the 3-day. So the 3-day, nothing has printed, which is of significance. Weekly, it's pushing. Weekly is definitely bullish. Daily, it is looking to me that it wants to go higher. So I'm going to say higher on gold for next day. It's higher, higher, lower. Okay, do nothing for me, personally. I will not be touching it for now. Well, this is getting interesting. Right now, this is going above this lower high. So it's creating an SFP, which is why we'll be not touching it. Like this is something which comes with experience. When you're attacking like a weekly level like this, think of it like the highest precedence SR. If it is going to be macro bullish, it's going to take some time to work through it, or wait for like a weekly candle to actually close above it. So I would not even be paying to the daily candle. I would be just like looking at the weekly candles over here. See how it's getting messy on the weekly chart. For 3 weeks it didn't do anything, and then it finally created an inside weekly candle. Now when we're looking at the inside weekly candle, it prints this. What do we do? Do we short, do we long, or do we do nothing? Short, short. Okay. It is a proper SFP on the daily chart. When I look at the 4-hour chart, that is a proper SFP too. Hourly chart, proper SFP. Okay, it's a proper trigger. I will short it too. But my stop loss is going to be above 1833. Agreed? It should not go above 1833. You guys were right. It's a short. So when you went lower on the 4-hour chart, I took the short in real time, by the way. And I was short from this level. Like I had a limit order sitting over there, mainly because I was looking at this inside weekly candle and I just put a limit order for short. Gold spiked over there. And when I saw this close happen like this, I moved my stop loss to here, 1826, right at my entry. I put it. I was like, it's not going above there anymore. When I saw this swing high information over there, once it took out this low, I closed that position because for me personally, gold had already gone down $20, which is great. I don't need to like hold it all the way down till there. Like it's a weekly chart, right? So in order to like take it all the way down from here to here, it's gonna take like weeks to get it down till there because it's an uptrend. And to like turn an uptrend, it takes like 3 weeks to actually do it. So for me personally, I was happy with it. that I took the short, basically closed it at this daily candles low. What happens the next day? Just punches higher casually. It's not going to the stop loss, but it just punches higher again, and just goes up. So when you see something like this, where the inside weekly candle, despite giving you a trigger to short, gives you a reaction, but that reaction gets bought up and it's making it go higher like that. That's a breakout in progress. That's a macro breakout in progress. Okay. Um, let's see what happens the next day. Keeps pushing, comes back lower. There is no inside daily candle at the moment, by the way. There is just like it goes for this low, punches higher, makes a new high, punches higher, takes out the previous day's high, punches higher, takes the previous day's high, punches higher, and then casually just like reverse it, takes up the previous day's low. So I'm not doing anything at the moment. I'm just like watching, and then punches higher. There's no position, just watching. Here, oh fuck the fuck. This is a pattern which is likely worth trading inside daily candle. You would be going on the hourly chart. Takes up the highs first. That was a big telltale for me, and it's doing it overnight. So when the market opens in the morning, it goes for the low. Here, would you long this or would you short this over here? Looking at this hourly candle, you took out the highs and then you're going lower, you took out this low, and then you're seeing this hourly SFP form. This is happening in market session at 8 a.m., which is 11 a.m. your time. Short, long, or do nothing over here. Liquidity is wait, Sam is short, this Jeff is doing nothing, Winmac is long, Matthew is wait. Oh. Alright, so there's a split between wait and short. So nobody wants to go long except Jeff. I would go long actually. I'd take that long and put a stop loss right below that. Now, technically speaking, I would have closed this trade over here. However, it really depends on the daily candle close. The moment we went for this high, I would have been out, which was over here, like basically this level. I would have been out on this particular candle here. Like I would have like a limit order sitting over there. I would have been out. I would not be like riding it all the way up till then, or not even like taking this dip, even though I would not have gotten stopped out. But I would have like taken that. Now the thing to realize is that it's the weekly chart. It's the fucking weekly chart. So remember, where did I take that long? It's over here. Now we were fixated on the daily chart, which is the lower time frame in comparison to the weekly chart. This is where our previous teaching, which I taught in the last lecture, comes into play, which is the weekly SR of highest precedence. This one. Where is the daily inside daily candle forming? Right at the weekly SR. So when I took this long position over here, I am betting that gold is macro bullish. It is looking to go above that weekly SR and start trending to the upside. Okay, so I'm basically anticipating that this is going to be a flip. That this weekly SR, which is this SR over here, is going to turn bullish. All right, that was my premise over there. when I was dealing with this inside daily candle failure. So you see how two concepts are blending over here. I have these SR levels mapped in advance. I just didn't map it over here just because I wanted to see your guys' opinion just based on the pattern itself. But when you have like a outsider's opinion that you have a higher time frame premise based on the weekly SR, and you're looking on this weekly SR to go up, oh sorry, for price to actually give up this weekly SR, you are entering right at the cusp of this weekly SR. So if the market actually goes bullish, you can hold that position for like days to come if it is actually going to be macro bullish going into the future. Because once you flip that weekly SR, it's not going below it anymore. So you should be waiting for the daily close and you should be putting your stop loss order right below that inside daily candle failure, like this stop from which happened. Because if it's going to be bullish, it's not going to go below that. But it did. So that would be a stop on all that. Okay, but it did not go there like instantly. It just kept trending for like days to come before it like collapsed it. And we had like a lot of price action to cover before that. But anyways, we have seen the collapse happen, so we'll take it from there and see what else we can do. So we're looking at this. Right. So I will be doing is I will be going in the weekly chart. We have the weekly SR, which is over here. This is also a weekly SR, which is over here. And this is also weekly SR. So we have three levels to play with. This should frame your bias in terms of what you should be doing in the market. Let's play it out. As you go lower, 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 taps it, there's a reaction. But there's no inside daily candle, that's why I'm just playing it. Another weekly SR tap. Okay, no. Okay, well I played this thing, so I'm not gonna do anything with it. Okay, so this is an inside daily candle. Just punches higher. Let's go further. It goes back down. I'm doing nothing at the moment. Goes back up again. That's the weekly SR playing out. Remember, the trend on the daily high, massive swing to the downside. This is bearish for now. So in order to like create a bottom, it will first have to create a low, which is at the weekly SR, bounces it, lower high, comes back down for a retest, higher low, goes up, higher high. So now our premise is that gold has turned bullish again because it's creating higher highs and higher lows. Okay, so you should know that as we go forward if we see more patterns develop. Now this is an inside daily candle. Okay, I'm going to map this out. Now when you see this thing happen, what do you do next? The next daily candle, is it going to be up, down, or do nothing? Hourly looks like this. Acuity is white, not too. I'd go long too, personally. Lack of restraint. All right. No. Okay, so hourly looks like this. I can give you that, but you have to assume that this push happened overnight, and even going into New York session, it kept pushing until like the last 2 hours. It did like a pullback over here. So this is what the daily candle looks like. I'm asking you what the next daily candle is going to do for Thursday, 16th of March. Okay, Miss Jeff is up. Matthew is long. Kibity wants to wait. Jeff is long. Sam is up. I would long it. Personally, I'm longing it. What does it do? Nothing. It makes an inside daily candle. All is technically bullish, so I mean, anybody who said long, they got it right. So now that we are looking at this as the next daily candle, as an inside daily candle, we have to map it out on the daily chart. Okay. And now we're going to go on the hourly chart and see if we can get a trigger. Nope, no trigger. It just kept going up. So technically, yeah, when we were like talking about this candle, inside daily candle, massive fish. The reason I was saying that it should be a long because when you look at the backstory, when we had the higher low being set because of the weekly SRs, which we had printed over here. So this was the weekly SR, which it defended on this one. And now that this one. When you look at the daily chart, it's trading above every weekly SR. So why would you expect that it's going to go down, right? There is no reason for the gold to go down because it has defended every weekly SR and has flipped this weekly SR too. There was no resistance. And on top of it, when you had this inside daily candle, it did a stop run and then it punched higher. In doing so, it closed above here, made a bullish engulfing. So the premise was to go long again. Okay. I'm going to remove it and we'll continue. Comes back down. There is no trade at the moment. No trade at the moment. There is a trade at the moment. Inside daily candle. Right? Okay. Let's see. This is the hourly chart. Equal highs. Goes lower like this. Do you long over here or do you wait? When looking at this out. Okay. Unless Jeff wants to wait. Mac also wants to wait. Like he already wants to wait. Wait is the right answer. Mainly because we just opened the new daily candle. And when you're just opening the new daily candle, you have like a spike down happening. This is technically a stop run, yes, but this is happening in a no trading session zone. So you could wait till like at least midnight, or this is the 11 p.m. You could wait till this mark before you do anything. That's where the real trading is going to happen. So waiting would have been nice. Now this is where the trading is starting for the day. You have this SFP forming. But there's no swing low formation at the moment. Now, do you long over here, or do you short, or do you do nothing at this candle? Because this is London session now. Let's say you decided to pull an all-nighter, and it's 3 a.m. New York time, and you're looking at the chart and be like, okay, well, I see that this is an inside daily candle. These are the equal highs. It has taken out the lows. It's almost going for this low. Do you long here? Do you short here? Or do you do nothing? Everybody wants to long. Jeff wants to long. Matthew wants to wait. But Mike wants to wait. Okay. I'll longer. and I would be wrong about it. So that was a wrong choice. Just be a stop out. So what does the daily candle look like? Instead of giving us the inside daily candle failure, this is a reversal. It's just going down. So when you see something like this, you need to actually go to the higher time frame, which is the 2-day chart or the 3-day chart, and look at the market over there. So in this case, you have inside 3-day candle, which looks like this, right? And the daily chart just punted this. Or so I would not be doing anything the next day. I will just be waiting, personally. Now we have this inside daily candle, which forms like that. No, I need to use a different color for that. So we have it in black, and we have the 3-day chart, which looks like this, right? So inside daily candle, 3-day chart, 3-day chart I'm marked in red. Inside daily candle is in black. For the next day, do we go up, do we go down, or do we wait? Wait, you mean like you want to see the 3-day candle close? Because this opened on Monday, and this is Tuesday, so this is where the 3-day candle opened. So the 3-day candle is going to close the next day on Wednesday, and the new 3-day candle opens on Thursday. So you want to see the Wednesday's candle and then do something on Thursday? Because you're not doing anything on this, so you want to wait. Do nothing. What else? Who else is going to answer this one? Wait. All right. People want to wait. I am the only one who wants to take along. We'll take along. Technically, wait would be a good answer. However, in this case, now we have a unique situation in our hands. The situation is, yes, no, double inside daily candle over here, and on top of it, double inside 3-day candle, which is this one. Let's mark it in red. Right? So this is real-time information you're gathering as the market is like unfolding in front of you, right? So you have double inside daily candle and double inside 3-day candle. So this is from the 3-day chart, and this is from the daily chart. This is where things get spicy, and I don't know what the market's going to do. I'll just have to like see. So let's play out what the market does. Now, when you look at this, do you long, do you short, do you do nothing the next day? You already know that this thing has happened. If you wanted, go on the hourly chart, and you could have taken a long on this S&P. But assuming that you're playing the 3-day candle chart and you have seen this price action played out, for the next day, would you long, would you short, or would you do nothing? That's the 3 options. You think so, but it's not actually. This is a, yeah, I would have done that too. Okay, long, long, long. 3 longs. Jeff is long too. Okay, Miss Jeff wants to wait. I'd go long too, and we would be wrong. However, it really matters on where your stop is. Even though you know you're getting a bearish down candle, my stop would be below here, so I would still be in the position personally. That would be the stop out, and but I've gone up over here. So when I would have like seen something like this, I would have taken a long again. I don't care much about the stop out because I'm thinking it is about to break out from a macro consolidation on the 3-day chart. Because, okay, let's rewind a little bit and give you more clarity. So when we had this price action unfold, you should be keeping track of the inside 3-day candle as well as it's going forward, right? Because that's the bigger time frame. That's what takes precedence. So even though you had this thing play out on the daily chart, like this, so the 3-day candle opened here. This is a 3-day candle low, which is in black. Go on the daily chart. All right. So when you see this close happen over here, the 3-day candle closes over here. Because the 3-day candle closed above this inside double 3-day candle, like there's no failure. This is a breakout, by the way. It closed above the high of this double inside 3-day candle. Once you see that, that's a trigger for this consolidation to start breaking out. Think about NASDAQ, that double inside weekly candle we played out in real time. What happened after that? Like it saw a massive expansion happen, right? So in this case, what I would personally think, gold is gearing up to go for 2075 when I see this double inside 3-day candle form, which it did not. That little fucker. It's annoying sometimes like this. Anyways, let's go back. But that would be a long because I would be anticipating the breakout to happen from this inside 3-day candle, at least attacking these highs in this case. So when you go on the daily chart, this would be the play in this moment. And now, wait. Okay, so now we should be keeping track of the weekly chart. The obvious draw for me personally is here. Okay. Now I'm going to use the weekly chart because this is a weekly level. So focusing on the daily level is not going to help us much. It's more to do with the weekly expansion. Now here, we have a inside weekly candle. So we're looking at this. Okay, so we have this low, this low, this high, this high. At the moment, there was an inside daily candle, but it took out the high. It's rejecting. Took out the high, high. Oof, almost. This is another example where you had the inside weekly candle, but you ran the highs first. So for the next weekly candle, is it going to go low or is it going to go up again once you see this close happen like this? Pardon me? I mean, the weekly candle closes like this. So we're anticipating what the next weekly candle is going to do. SFP. Okay, so Mr. Once Long. What about you guys? Long, long, nothing. Wait. I'm looking at the daily chart. It looks like this. I would short it, personally, mainly because of this failure over here. But let's see. I could be wrong. Next weekly candle goes up. I would have been right. It was a short. But we created a new inside weekly candle over here. Now, we are already breaking below here. So what I would do is I would go on the daily chart and we will look what the daily chart does on the inside weekly candle. If you want to long it or short it or do nothing. You go for the low. Do you long it here? Do you short it here or do nothing? Okay. All right. So where would your stop be is the real question because it is a long, yes, but where are you putting the stop? Are you gonna put it right below here at this low, or are you gonna go at this low? Because you have to like choose a low in this case, or go below this low. So this one, 1950. All right. Okay, so long. I would long it too. Yeah. That would have been a stop out. It would have been a stop out. So that means this weekly chart is actually pulling back in our case, right? So we are dealing with a weekly pullback. Uh, yeah. Now I'm letting this thing play out because it's a bit annoying on how gold moves because it's creating liquidity for like a macro breakout. So I'm just like letting the weekly chart play out before we go into the trending session again, right? Okay, this is where I think gold gets trending again. Okay, I'm gonna rewind it and take it over here. Now we know that gold is trending again and it's bullish on the higher time frame. So we have this daily candle. Now this is formed. What do you do? Do you long it, short it, do nothing? Wait, wait. All right. I think people want to wait. I would wait too, personally, because I want to see if it takes out this low or is it taking out that high. Um, but no, I would not short it. Like this would be a learning lesson. So pay attention to what I'm going to teach you over here. This is the next candle. We have a double inside daily candle. Now what do we do? Do we long it, short it, or do nothing for the next day? Nothing. Wait, wait. Jeff, answer. You don't know. You know what I'm gonna do? I'm gonna long it with maximum amount. I'll buy it. I will long it. Like I would go heavy long on this thing because this is a pattern which is very high strike rate for me, and I will teach you guys on why this is a high strike rate pattern. Personally, I will be making $24 million on this trade. Great. I close it. This would have been a long, and it would have been like a trending long where the market is gonna like break out big time. Now, the reason I'm saying that this is a massive long is because we have a pattern which I like to call a pregnant lady giving a middle finger to everybody saying "fuck you." I actually have a picture of that which I found out, which I think literally represents this particular phenomenon. Like specifically like this. This is what this pattern looks like, in my opinion, where you have a very big candle, and this candle forms over here, which in my opinion looks like a lady getting pregnant. And then the next candle which comes on is like much smaller than this one, which looks like the middle finger, which is much smaller than the baby itself. And that is the market's way of telling you it's about to tell you to fuck off, that it wants to trend and it wants to really take off. Where double inside daily candles, when formed in this massive uptrend, they represent consolidation for the next trending move. And that consolidation is about to pop. It's going to go real hard. And this is what it represents. In essence, yes, it could be a flag, but from a candlestick perspective, this is like the shape of it. Like it is a very peculiar shape, and I've seen this shape form like multiple times on multiple instances for gold, and gold loves this pattern. Like the pregnant lady giving a finger. Um, like basically, this little candle is the middle finger. This is the baby, and this is the pregnant lady standing over here. Is how I try to view it. Like you need this specific shape. Like this pullback should not be deep enough. It should be like just like hanging like a pouch, and this should be like a much smaller candle in comparison to this one. That is telling you that the market is going to tell everybody to fuck off after that. Um, so yeah, like gold loves this pattern. Whenever you see this, long gold. It's not going to go short in this case. All right, so that's a pattern I've kind of recognized while I've been practicing how to trade gold over time, and it forms like every once in a while, at least. So say for example, when you noticed this inside daily candle here, if the other candle over here would have been another inside daily candle, it would have been the candidate for the pregnant lady saying fuck off to everybody. But it did not. It's okay, so you need like a two-step pattern in this case. You need the other inside daily candle as well to be an inside daily candle. I think I noticed this pattern another. Let me check. Where is it? Hmm. Now this actually had the potential of doing it, where you had an inside daily candle with the next one actually like already punched higher. Like it punched higher. We had an inside daily candle. So if the third candle would have been another inside daily candle, you had already like a big candlestick here. So an inside daily candle with another inside daily candle within this range would have been like a double inside daily candle. That would have been like a very good candidate or something similar. Now in this case, this is where it happened. Another over here. I'm going to take it out and let you guys look at it again on replay. So you had a massive push, and then you had an inside daily candle here. The next inside daily candle from there was a very small one. This is the middle finger, by the way. Like you can see the wick. That's the middle finger being printed, and this is the baby. This is the pregnant lady standing in front of here. And the candle after that, it starts expanding. So all you got to do is move your stop losses from, let's say you longed over here, you could keep your stop loss right below this low at 1986. And then once you see this expansion candle happen like this, closes over here, you can move your stop loss from 1987 to 1991, and then keep writing it. Like just keep moving your stop loss. Since it's a trending pattern, all you gotta do is move your stop loss. So you should not be closing your position just because you took out the high over here. That's not what I'm trying to suggest over here. Just for this pattern specifically, when the move starts happening to the upside, it's gonna be trending, and you should be just like moving your stop losses um, from this low to this low to this low to this low to this low, like that, and just like keep writing it up until you get stopped out. I mean, it went up like another $150 before you got stopped out. But that's the essence of it. That once you see that pattern, this is a very, very explosive trending pattern for gold specifically. I don't care much about the other part, but for gold, this is one. I think I saw this thing in Ethereum once, but on Ethereum, if you recall, this formed on the 2-week chart, not on the daily chart. Now, the Dame would remember this very perfectly, that I mentioned the spot long on Ethereum on the 2-week chart, that this was the pregnant lady giving a middle finger on the 2-week chart. And Ethereum just went bonkers after that. Like it really took off after that. Like this was massive long on Ethereum. So the consolidation was huge. Like this is on the 2-week chart we're talking about. So the consolidation, it kept happening for like days and days. I think 3 weeks or 4 weeks. All right, Lance, have a good day. I'm just gonna wrap it up, but I was like doing these examples because I was waiting for this pattern to show up. It's the last remaining pattern I wanted to explain before I conclude this workshop. Okay, so that's an example. Um, I think it's very prevalent on the 2-week chart, and it's very prevalent on the daily chart. You could also like try to find it on the weekly chart, but I haven't seen this on the weekly chart as much. What it represents, it basically means consolidation ready to just break out and say fuck off to everybody. Like it's gonna go. So Ethereum, for example, it trended for like multiple weeks from there, and it went up like 72% after breaking out from that pattern. Okay, so this is in total for me personally that I wanted to cover this. I would highly recommend that you start mapping these things out on the daily chart, on the weekly chart, and on the 2-week chart. I covered examples as much as I could to my own understanding, but it will help you a lot once you see it play out in real time market hours. That will give you a much better understanding on how the liquidity hunts happen and at what time of the day they happen. And once you see it like play out in real time, it will give you a lot more confidence on how to play it. Okay, but hopefully this was insightful because I trade these patterns every day, every week, and when I cycle through the markets, like let's say if I'm looking at JP 2025, which is the Japan stock index, then there is like let's say for example in Japan stock index there was this inside 2-week candle and we broke down. So I'm anticipating that there's going to be like a prolonged expansion over here. Then there's Germany, there's gold, there's silver. Like I would go on every time frame. I would go from like 3-week to 2-week to week and 3-day and daily. Like I would map all these things out and look at okay where exactly is like a inside weekly candle formula. So for example on silver, this would be an inside weekly candle. So you can like monitor what silver does with this inside weekly candle. It's gapping down at the moment. So we have a new 2-week candle as well. So if silver is going to expand, it should not go below this low at 26.875. But if you have an inside weekly candle, it can run this low. So stuff like that, you need to be like mapping out where exactly is my stop loss, where exactly should I be entering, and take notes, journal it down, and practice it as you go. So once you like see these patterns play out in real time and you have like a lot of data set already like in your mind, which you have like a proven track record, you would know which market plays these out perfectly and which market does not respect it. So for me personally, I know NASDAQ plays it out perfectly, gold plays it out perfectly, and Ethereum plays it out perfectly. Like these 3 markets, whenever these patterns show up, I'm like hands-on with them. And I know like this is gonna be like my lunch money because they have like at least a 70 to 75% strike rate for me to play out. That is much higher than all the other patterns of trade, which have like at least 60% or like a 50% strike rate. It's like a coin flip. But this is like a 70% strike rate, so I'm like I go heavier in size when these things trigger for me. Okay, so I hope this makes sense on how to trade it and how to spot it. So for gold, I mentioned this is a inside weekly candle on gold at the moment, and we're trying to like go down at the moment. I would just wait, mainly because for gold, I was looking at the 2-day chart and there's like an inside 2-day candle, so I think this low will be getting taken out. But when it comes down lower, like looking at the 12-hour chart, see over here on the 12-hour, it did an inside 12-hour run like that. There was a proper run to the downside. So when gold is coming down, I would not anticipate that gold should be going below the stop run. I would rather expect gold to create like a consolidation and defend the 0.75 or 0.79 when it comes here. So what you could do is take a long position on gold and target something like this. Like that. So that's a 2.85 R on gold. But there is no trigger at the moment. I would be personally waiting to see what happens tomorrow because all this is happening like overnight. The market has not even opened, and this is just like Sunday for us. That is like it's Monday in Asia, but Sunday for us. So we'll see what happens tomorrow for gold, and then I'll take a position on gold if I have to. But at the same time, I am also aware that this high was run out, which is for inside 3-day candle. So it's okay if price wants to like come down over here. I would long it over here too. Yeah, gold is like a personal favorite for me to trade this pattern, so I'm like watching it like a hawk. If it can come and run these lows, great. I would long it over here. Okay, but I hope this pattern was useful in terms of the discussion I've done. If you have any questions in terms of how to trade it, and I know this is a developing topic, so we will be like reintroducing it for higher time frames for other instruments. Like I've only done like the inside daily candle, but the inside weekly candle is also like one of my favorites. So next session we can like focus on the inside weekly candle charts and go towards the swing trading aspect. This was more so for the day trading and scalping aspect, where like taking the position and holding it for just the next day, and that's how you go with that. Until the next week, I will talk to you guys later. Have a good evening. Bye. Yeah, that's how you're gonna learn. That's exactly how you're gonna learn. Otherwise, if I just like give a lecture and you listen and you're not practicing, then whatever I say is just gonna go away from your mind the next day. So you gotta like practice with me as we go. If you gotta learn. Which is why I said, this is like a 2,000 hour session we just pulled off. And the strategy, nobody really talks about it the way I implement that. Um, yeah, like you see me pull pairs. Of course, we'll do a lot more of this as we implement new strategies. But right now, I'm like trying to teach the basics of what the building blocks are, so that you are able to communicate in the same language with me. At the moment, I know like some people are like babies, like they're still learning the language, like they don't quite know it. So I'm still introducing those little sprinkles so that you can like actually talk with me and understand like what exactly am I discussing in the market. So going forward, like once you have like figured out what the linguistic portion is for trading, then I'll be like doing more hands-on exercises where you'll be like telling me what the market should be doing, and then we'll discuss it on why exactly did it not do what it was doing, and how it should have been traded, how the risk management should have worked, how the entry and execution should have worked. Like we'll do all that stuff, but first the basics need to be taught. So that's how the live streams are going to progress going forward. All right. Yeah. All right. You too. Bye.